Hello everyone and welcome to Ticker.com's news channel on YouTube. On this channel, we review stock markets, discuss financial news, market trends, and economic data from Wall Street to Global Street. So let's dive in. Key economic events of the week included labor market estimates, international trade deficit, factory orders, and JOLT report. Non-farm payrolls for June increased by 209,000 and fell sharply from the downwardly revised 306,000 in May, the U.S. Bureau of Labor Statistics reported Friday. Jobless rate remained nearly unchanged at 3.6% in the month. Non-farm employment has grown by an average of 278,000 per month over the first 6 months of this year, lower than the monthly average of 399,000 in the last year. But the critical thing is that the labor market is still expanding at a healthy pace. In June, average hourly earnings for all employees on private non-farm payrolls rose by 12 cents or 0.4% to $33.58. Over the past 12 months, average hourly earnings have increased by 4%, a measure closely watched by economists for the sign of wage inflation. The average work week for all private non-farm payrolls edged up 0.1 hour to 34.4 hours in June. On Thursday, the JOLT report showed that employee quit rate declined towards the pre-pandemic level in May, suggesting that the labor supply and demand are in better balance than before. The number of job openings declined by 496,000 in June to 9.8 million, according to the Job Openings and Labor Turnover Survey released by the U.S. Bureau of Labor Statistics. Job opening fell below 10 million level but sharply above the pandemic level of 7 million, indicating that labor market conditions remain tight. The number of quits rose by 250,000 from the previous month to 4 million in May of this year, the highest level since last December. The quit rate is still at 4 million, which is below the record 4.5 million reached in November, but was still historically high. Another report released by ADP, which tracks the private sector job markets, released on Thursday showed a dramatically different payroll gains. ADP report released on Thursday showed private sector employment surged in June by a whopping 497,000, where half the gains were driven by increases in the leisure and hospitality sector. The ADP data tracks private sector job markets, and the surveys are subject to significant revisions and are often volatile. In other words, they are less reliable. Financial markets are on high alert for indications that the Federal Reserve may increase rates at a faster pace after pausing in June. On Wednesday, the latest FOMC policy meeting minutes showed that several committee members noted that most of the impact of 500 basis points of increase in rates have already been felt in the economy, but the pace of decline in inflation has been less than anticipated. Yet, consumer price inflation is significantly above the central bank's target of 2%. Participants also noted that more rate hikes may be necessary in cooling inflation to the central bank's 2% goal, and nominal wage gains have been moderating but are still inconsistent with the central bank's target on inflation. As we talked earlier, the wage inflation is still about 4.4% over the last 12 months ending in June. In other economic news, U.S. goods and services trade deficit declined to $69 billion in May from the revised $74 billion in April, the U.S. Census Bureau reported Thursday. Exports in May declined just under 1% from the previous month to $247 billion, and imports fell 2.3% to $316 billion. Turning our attention to Europe, the measure of wholesale price inflation turned negative for the first time in May since December of last year, after energy costs dropped 13% and intermediate goods prices fell 1.5%. Producer price inflation in the euro area declined by 1.5% in May, following a downwardly revised increase of 0.9% in April, the Statistical Office of the European Union reported Wednesday. On a monthly basis, producer price inflation declined 1.9% in May, a fifth monthly decline in a row. In other economic news, UK home prices fell at the fastest pace in 12 years in June, according to data released by Lloyds Bank subsidiary Halifax. Home prices fell 2.6% in June, the largest annual decline since June 2011, 12 years ago, following a 1% fall in May. Elevated home prices and surging interest rates have kept buyers away from the market. German factory orders rose 6.4% in May from the upwardly revised 0.2% in April, the Federal Statistics Office, or Destatis, reported Wednesday. New orders surged the most since June of 2020 after large ticket items jumped and new orders for vehicles increased 8.6%, and the other transport equipment soared 137%. Retail sales in the Eurozone remained unchanged on a monthly basis for the second month in a row in May, after falling in February and March, the Statistical Office of the European Union reported Wednesday. Household budgets have been hit hard twice, first by rising prices and second by higher borrowing costs. Spain's jobless rates fell by 1.8% to 50,268 people from the previous month in June to 2.69 million, the lowest level since September of 2008, the Ministry of Labor and Social Economy reported Tuesday. The registered unemployed people stayed below 3 million for the 14th month in a row. Seasonally adjusted German trade surplus decreased to 14.5 billion euros in May from the downwardly revised surplus of 16.5 billion in April and just 4.4 billion a year ago. Trade surplus was the smallest since last December. Exports declined 0.1% from the previous month to about 130 billion, after sales to member states in the EU declined 1.5% to 70 billion and rose 1.5 billion to 60.5 billion to the countries outside the EU. On a yearly basis, exports declined 4% in May and imports dropped 10.6%. Most German exports went to the United States and sales decreased 3.6%, and sales to China decreased 1.6%, and to the UK fell 5.8%. Now looking at the economic news from Asia, Japan's business sentiment improved in the second quarter according to a Tankan survey conducted by the Bank of Japan. Sentiment among large manufacturing businesses improved from the first quarter, and sentiment index for non-manufacturing business increased to the highest level since June 2019. Nominal cash earnings for Japan's workers rose 2.5% in May from the previous year, the Labor Ministry reported Friday, and the gains were ahead of expectation of 1.2% increase. The larger-than-expected wage gains supported market speculation that the central bank will consider adjusting policy rates sooner than later. The gains in wages still left households worse off, as pay failed to keep up with rising prices, which will be a factor in curbing future consumption growth. Real cash earnings fell 1.2% from a year earlier in May, though decreasing less than economists forecasted. China's manufacturing activities expanded at a slower pace in June, according to a survey conducted by Caixin and Standard & Poor's Global. Manufacturing Purchasing Managers Index eased to 50.5 in June from 50.9 in May, and reflecting the weakness reported by the National Bureau of Statistics in its official index. In India, market sentiment was bolstered after the manufacturing index showed growth in June, marking the second year in a row of expansion according to the industry survey by S&P Global. The Purchasing Managers Index in June eased to 57.8 from 58.7 in May, and the level above 50 indicates expansion. New orders were at the highest level since February 2021, indicating strong demand from clients. Let us review the stock markets around the world. The 10 interest rate hikes in the last 1 year and the regional banking turmoils have failed to slow down the U.S. economy because consumer spending is supported by above-average growth in the real disposable personal income and excess savings. World markets have been on hold on the worries of rising prospects of higher interest rates and what it means for local economies last week. Odds are rising that the Fed may increase interest rates by 50 basis points and not 25 as most market watchers are anticipating. The rate hike fears drag interest rate sensitive stocks of home builders, steel makers, semiconductor chip makers, and regional banks last week. The plight of banks and regional banks got dire on the worries that higher rates would increase losses in Treasury securities held for maturity, which may force banks to seek support from investors or the Federal Reserve Bank. Mortgage rates also advanced following the rise in Treasury yields and rose to the level last seen in several years ago. Mortgage rates on widely used 30-year fixed mortgage increased to 7.22% according to Mortgage News Daily. This means that homeowners with 300,000 mortgages, the monthly payment of principal and interest increased by nearly $100 to $2,040 just from a week ago. Now turning our attention to the company-specific news. Tesla produced 479,700 vehicles and delivered 466,140 in the second quarter. Production jumped 83% from a year ago, and sales in the latest quarter were supported by as much as $10,000 company incentives and additional $7,500 federal tax credits under the U.S. Inflation Reduction Act. Rivian reiterated its annual production outlook of 50,000 vehicles. UPS and Teamsters Union reached an impasse in contract negotiations. Facebook parent Meta released its new social platform called Threads, competing with Twitter. JetBlue said it will end its American Airlines partnership in the Northeast. Levi Strauss lowered its 2023 outlook. French grocer Casino Guicard said it will evaluate two competing restructuring proposals that have been submitted, but both proposals fall short of companies' expectation of the debt load. Now moving on to the economic releases and earnings releases next week. Consumer price inflation, producer price inflation data, and foreign trade prices data are scheduled to be released in the United States. Second quarter earnings season will start with reports from leading banks and Delta Airlines, PepsiCo, BlackRock, and United Health Group. Inflation data from Germany, France, Sweden, and Spain are on tap, along with data on industrial production and trade balance for the euro area. China is also set to release its trade balance and housing prices and inflation data for June, and India will also release its inflation rate for the month. We will see you next week.